Hello and welcome. In this lecture video, I'm going to be talking about employer FICA taxes and federal unemployment taxes and state unemployment taxes, and then also do some quick check problems, okay? All right, so in the last lecture video, we talked about FICA and we talked about employee income taxes. Basically, we were talking about payroll liabilities that the employee pays, right? So basically what we talked about in the last lecture video is that the employer is going to withhold Social Security, Medicare, contributions to retirement, contributions to union dues, life insurance on behalf of the employee, but those are not expenses for the employer. They're just withholding them from the employee's paycheck and then paying them to the appropriate person. Okay, so what we talked about in the last lecture video were those employee deductions, so deductions from the employee paycheck that the employer deducts from the employee paycheck and just holds as a current liability until they pay to the appropriate person. Now what we're talking about, though, are additional expenses for employers. So I concluded the last lecture video by talking about FICA. And what I was saying, right, is that you, as an employee, you pay FICA. You pay 6.2% up to $132,900 as of 2019. And then you pay 1.45% of your salary for Medicare. So the 6.2% is for Social Security, 1.45% for Medicare. So you pay that. And so again, that's withheld from your paycheck by your employer and then sent to the appropriate government agency, okay, on your behalf. So you don't have to do it. But what I also was saying at the end of the last lecture video is that your employer also pays Social Security and Medicare. So not only do they withhold it on your behalf, they also pay it. Okay, so that's why I was saying at the end of the last lecture video that if you're self-employed, if you're paid on a 1099 basis, you're a contractor or freelancer, you're paid on a 1099 basis, you pay the employer and the employee FICA. So it's around 15%, give or take, that comes out of your paycheck. Okay, versus if you're employed, you only pay 6.2% up to that cap, $132,900, and then 1.45%. So you pay about half. But if you're self-employed, you pay the employer and the employee. So what I was saying, again, the employer is going to pay 6.2% up to the $132,900 for Social Security, 1.45% of all salaries for Medicare. That is an additional expense for the employer. This is an additional expense for the employer, okay? Employers also pay federal unemployment taxes, FUTA, okay? So federal government participates with states in joint federal and state unemployment insurance programs. Each state has its own programs, and the federal government approves the state programs and pays some of their administrative expenses. And so employers are subject to federal unemployment taxes on wages, okay? So in 2019, it was 6% on the first $7,000 of wages paid to each employee. But there's a credit up to 5.4% for state unemployment taxes paid. So then the effective rate is lower. It's the 6 minus the 5.4, so it's lower, okay? And then there is a cap, $7,000. So then there's also state unemployment taxes. States provide unemployment insurance, okay? In 2019, the basic rate is 5.4% of the first $7,000 wages paid to each employees, okay? And the state will assign a merit rating to a company's stability of employing workers. So if you fire a lot of people, you're probably going to pay a higher rate, okay? So merit ratings may lower or increase state unemployment taxes, okay? So when we look over here in terms of our payroll taxes, so again, this is an additional expense for employers. Federal unemployment taxes is an additional expense for employers. And then employers also pay additional Social Security and Medicare on your behalf. So those are additional expenses. So with Social Security and Medicare, they withhold money from your paycheck. You pay some of it, but then the employer also pays some of it, so it becomes an additional expense. So in the prior lecture video, when I was talking about if we hire a faculty member salary of $100,000, that's not the cost to the university. The cost to the university is more about $150,000, give or take, okay? So let's look at our example. Assume that $2,000 of salary expense is earned by someone who has not reached that $5,000 for the year. Okay, so they haven't reached the $7,000 cap on state unemployment taxes and federal unemployment taxes. And let's assume that the federal unemployment tax is 0.8. So remember how I was saying they get a credit for state unemployment? Okay, so it's 0.8%. Okay. And then state unemployment is 5.4. The entire salaries expense because we're below that cap. So then what happens, right? Remember, they have that $2,000 worth of salary expense, but then they have additional expenses right there. They pay Social Security, the 6.2% of the 2,000, right? 6.2% of the 2,000 right here. 1.45% of the 2,000 for Medicare, and then state unemployment, which is the 2,000 times the 0.0454. 108, and then federal unemployment 0.008 times the 2,000 of 16. So this is different than what we talked about with the employee. We talked about the employee, right? Those were in that situation with the employee deductions, the employer was just simply withholding the money and then remitting it to the appropriate government agency, serving as like a collector. In this case, we're saying this is additional expense. Okay? So it can be a little bit confusing with regard to who pays what. So up on Canvas, I have this piece of paper. I have this document, and it says employer versus employee. What does the employee pay? What does the employer pay? Well, your employer pays Social Security, Medicare, federal unemployment, state unemployment, any share of medical, any share of retirement, other benefits. What does the employee pay? FICA, Medicare, FICA Social Security, FICA Medicare, federal income tax, state income tax, their share of medical, their share of retirement, and then any other benefits, okay? We talk about multi-period liabilities. Those are liabilities that can extend multiple periods. So for example, notes payable, unearned revenue. The portion of unearned revenue that will be fulfilled within the next year is our current, and the remaining would be the long term. So basically what we're talking about here is what we talked about back in chapter 4 with the classified balance sheet. Remember, we had that long-term liability, and we said that some of that long-term liability is coming due this next year, and we removed it from long-term, and we said this is the current portion of the long-term liability. That's what we're saying here. We would have to classify that as current to say it's a current liability. Okay? All right, so what we have now is on page 267 and 268 through page 270, we have some additional practice problems. So I want you to pause the lecture video and do the practice, the quick check problems here on pages 267 through 270, and then we'll come back and check it. Okay? Thanks. All right, so let's take a look. So number 85 here on page 267, an employee earned $47,000 during the year. The FICA tax rate is 6.2% for Social Security, 1.45% for Medicare. The employee's annual FICA taxes is equal to what? Well, we're below the 132. We're below the FICA limit. So you know what? We're going to be multiplying that 47,000 times our 0.062. Gives us our 2009-14. And then there is no limit on Medicare. So plus the 47,000 times our 0.0145 gives us 681. The right answer is C, 3,595.50. Okay, that's the right answer. So again, way below the cap. Now, again, on the test, I'm not going to ask you to memorize the cap, but you do need to know that the cap is above $100,000, okay, for Social Security. All right. I'm not going to say what was the cap in 2018 and 2017, 2019, because it changes every year. And I just think you can look that up. That's not something you need to memorize. All right. So let's look at number 99, which is a trick question. Okay. Number 99, an employee earned $62,500 during the year. Working for an employer, we give our FICA tax rate for Social Security and for Medicare, and we give the unemployment taxes, and they're applied on the first $7,000. What's the amount of total unemployment taxes that the employee must pay? 0. Because who pays the unemployment taxes? Not the employee, but the employer. Okay? The employer pays that. So tricky, tricky, tricky. Let's look at number 119. Okay? So, an employee earns $5,500 per month working for an employer. FICA is 6.2. FICA Medicare is 1.45. Federal unemployment taxes 0.8%. State unemployment 4.4. Unemployment taxes are applied to the first $7,000. The company has $182 in federal income taxes, and then $150 for health insurance and $75 for retirement. What's the net pay? Well, we take our gross pay, $5,500, okay, and this net pay is their take-home pay, minus FICA, because the employee pays FICA, 0.062%, 0.0145 gives us the 420 for Social Security and Medicare. And then the employee also pays federal income tax, they pay the health insurance, and then they also pay their retirement. B is the right answer here for number 119. Okay? Then let's look at number 120. Last quick check problem here. An employee earns $5,500 per month working for an employer. The FICA tax rate for Social Security is 6.2%, for Medicare 1.45%. Federal unemployment insurance 0.8, state unemployment 4.4. Federal unemployment taxes are applied on the first $7,000 of employees' pay. Then we have our federal income taxes, we have our health insurance, retirement. In this case is what's the amount that the employer should record as payroll tax expense. So this is asking you, what does the employer pay? That's what this is asking for, because that would be an additional expense. So that's what this is saying, is what does the employer pay? Okay? Well, they pay FICA, and then they pay unemployment insurance. So our FICA is our gross pay times our 0.062 for Social Security plus 0.0145 for Medicare, total FICA, plus the unemployment insurance because they are below the $7,000. Okay? They're below the $7,000 for January, okay, first month. So they're below the $7,000, so we say our $5,500 times our 0.008 plus our 0.044, which is our 0.8% and our 4.4% here. For state unemployment gives us 286. Add the two together, 70675. E is the right answer for number 120. Okay? All right, well, I'm going to end this lecture video now. Thank you so much. Bye.